from Bell Direct and Ben LeBrun from CMC Market Stockbroking. You can join in the conversation with any questions, any comments, anything you might have. Or on Twitter, just use hashtag MKTDAY. Let's get straight into it. Julia Lee, obviously after the extraordinary session yesterday, a lot of eyes focused on Wall Street, what was going to happen, how we're going to open. As soon as we opened though, bang, out of the gate strong. Loved it.
It was a fantastic day for the Australian share market, up by 2.6%. In fact, this is the biggest gain that we have seen since May 2010, so in more than a year. All sectors did trade high with the exception of information technology as well as the property sector, but the best areas were the biggest areas of our market. The energy, the materials, the financial sectors all gaining more than 3%. Once again, seeing heavy volumes. We saw more than $8 billion being traded, and it was those beaten up in the past week that were the best gainers today. We saw Wanam up 20%. We also saw Link Energy gaining over 15%, and we saw Iluka gaining 12.5%. So fantastic day for some of those beaten up stocks. So we saw a strong reversal pattern coming out yesterday on the candlesticks, and that was followed through on today's market.
It really did start, I suppose, discounting what happened on our market. We really were led, I suppose, today by the US, in particular those comments that we got from the Fed. Look, what did you make of them? It seemed everybody took something out of it, and quite often something a little bit different.
Look, it looks like the Federal Reserve is going to keep rates close to zero now till mid-2013. So a raft of different broker notes coming through today. I was reading one from Goldman Sachs from the chief economist there. Now, Goldman Sachs seeing a greater than even chance of more quantitative easing coming out of the US. In fact, QE3 is now their base case scenario. If we have a look at the markets, we saw extreme confusion on the markets last night in the US. First, we saw the Dow up by 100 points, and then we saw it flat. And then we saw it rally into that Fed announcement, which was a little bit late at 2:19 p.m. After that Fed announcement, though, the entire rally absolutely vanished. Then the Dow was down by 180 points, and then by the end, it was up by more than 400 points. So certainly a lot of uncertainty in terms of the US markets. I guess what quantitative easing really means, though, is more devaluation of the US dollar. Often a lot of investors ask here in Australia, why does the Australian market underperform the US market? And the big answer is it has all to do with currency. And if we have a look at the Australian share market, this is just the Australian share market over the past couple of years. So this is the Australian market over the past couple of years, and you can see we've seen an extreme downturn there, but otherwise the Australian market hasn't done too much at all. But if we have a look at the Australian market in US dollars, this is what the Australian market looks like in US dollars, just on the top there. And I've got the S&P 500 just on the bottom there. And if I overlay the two, what you'll see is they basically look the same. So we always talk about US market outperforming the Australian market, but in actual fact, it's the currency effect which is coming into play here, and that is the devaluation of the US currency, the money supply inflation, which is seeing the assets inflate. But in US dollar terms, if you go back to the currency effect, it has all to do with the currency effect. So I guess what this new policy really means is strength in the Australian dollar. And of course, over the last couple of years, we've seen many records broken on that front.
So, Julia, just winding back 24 hours and just following on from the impact the currency has, does that mean, in your opinion, that when we saw the Aussie dollar go, however briefly, below parity, but hitting those lower levels, that was potentially a big buy signal for investors?
It looks like in terms of currency, if indeed we do see more quantitative easing, that would have been a huge buy signal for investors and traders in terms of the Australian currency. Remember, the Australian currency dipped below parity before that FOMC announcement, and after the FOMC announcement, we saw it recovering a massive 4 cents. So if we have a look at currency, I think this is going to be central over the next couple of years. We're going to see currency wars. We've already seen intervention by the Swiss National Bank, basically bringing their rates down to zero to try and stop that record surge in the Swiss franc. We've seen the Japanese Bank of Japan spending $58 billion last week trying to stop the ascension in their currency. We've seen Brazil coming out to try and battle the rise that we've seen in their currency as well. So a number of different economies around the world struggling because of the devaluation in US dollars, and it looks like we're going to see more of it. So it does look like currency intervention. It is probably going to be a feature of markets in the next few years, and of course the market's taking that into account, really looking for more US dollar devaluation.